Hey, hi, I'm back, Kaushik Chatterjee. So, last couple of videos, I believe most of the EMI part we have discussed, and still there are a lot more things to be discussed. But I hope most of the videos you have gone through and you have just have a fair idea now what types of EMIs are there, what exactly will be helpful for me, or let's say what option even I can take even to save my money, to save my option. All those things I think in details. Couple of last videos I think we have been discussed, and definitely I hope you have gone through and taken some more points on this, right? So today also we are going to discuss related to something that only, and this will be definitely a different concept, a different idea, and different discussion. But definitely yes, that also going to help out you, like any kind of EMIs, any kind of it's could be related to your any loans, especially let's say like when people are paying, let's say, a lot of home loans. So it could be very very useful for their home loans especially. So what we are going to discuss now, it is all about a step down option or step down payment, you can say. Ideally this option basically it will be used only for this home loan payment, because people, today's scenario, even people are paying a huge even home loans. And I mean, most of the people, even they have their home loans, or if they want to purchase a home loan, I mean, if they want to purchase a home, they definitely they have to go for a loan. And this kind of option, even if they have in their mind, so they can understand, what option even I can take. So what do you mean by a step down option or step down payment? So the name itself, you can understand, right? So there will be a step down option. Yes, definitely. Again, I'm not talking something about engineering subject. People are from electrical engineering background. They might be thinking that is similar to step up, step down. Nothing like this. It is nothing related to that. It is differently, entirely different. It is all about the home loan, right? Step up, I hope you might have seen the video, you might have got the idea. Now today we are going to discuss about step down. So it is just opposite. If you have gone through this step up option, so this will be just like a opposite option. Now how it will work, so let me just tell you a real scenario, a case study. Like let's say if I give an example, let's say somebody is paying, let's say a 20 years, let's say a 10-year of home loan, just an example. And in this 10 year, 20 years 10 year, now what will happen, let's say I'll just keep the middle, let's say 10th and then 20. So 10th year it will be the, let's say it will be the middle year, whatever tenure you have. Now normally EMI, how it works actually, already we have seen the fundamental of EMI. So it will be just equally divided, even whatever my entire amount, it will be equally divided by monthly, and that whatever the tenure I'm going to pay with the principal and the interest, I'm going to pay it off. So that is the simple understanding of the EMI that already you have seen. If you have not watched my video, so you can go back and you can see the EMI videos again. I mean, what is exactly how EMI works, so you can get a fair idea of it. Now, so let's say if I'm paying, let's say imagine, let's say a 50,000 EMI, right? So entire, let's say 20 years, I need to pay this 50,000. That's what I mean. That is a typical normal EMI works actually. So every month I have to pay this 50,000 till the tenure of 20 years. I can pay this EMI, right? Now in this step down option, what will happen? Now let's say today, let's say I'm 30 years. Today, let's say I'm 40 years, or let's say today I'm 50 years. So now another, let's say 20 years, or let's say another 10 years, or another, let's say whatever, uh, 10 15 years, whatever tenure even I'm going to take my retirement. So till the time, let's say there will be no financial crunch. Yet it could be, that's what I told, even there is no guarantee. Like I don't know what will be my financial situation even tomorrow, what will be my earning even tomorrow. That is not even to the extent even in not in my hand. But on a fair note, let's say I'm just counting, there should not be any kind of problem, or let's say it will be like going on a similar manner. But after, let's say, that certain commitment, even let's say after my 50, or let's say after my 45, or let's say after my 55, so I know there will be some other commitment which I need to manage. Now The purpose of discussing is what? Because EMI already we know. If I have taken any kind of loan, or let's say especially we are talking about this option, mostly it will be used for the home loan people. People have taken for a home loan, and that this particular EMI option, it will be helpful for them. But what is the importance, what is the significance of this step down EMI option? Now, as I told you, now let's say today I'm 40, and let's say this tenure will be for 20 years, right? Because by 60, my maturity will be done, even my loan tenure it will be done, because I'm going to take the retirement. Most of the banks, they will offer you up to even 60 years, right? Now, let's say 10 years. So when I'm reaching, let's say 50. Now, after 50, I know there will be some other commitment will come, because I know that is what this, all this financial discussion, all this calculation, all this kind of planning we are doing over here. So till 40 to 50, if I look out the 10 years, there is absolutely there is no problem. But I know after 50 there might be some commitment which I already even pre-notified, pre-knows, and I need to prepare for it. So what is the major challenge then now? I mean, it will be a major challenge even that time if I reach even 50. The 50,000, let's say, as I taken an example, the 50,000 probably it will be a hiccup for me even after my 50. So what is the solution? So the whatever we have discussed in the step up option, so this is just opposite of that. So in spite of 50, let's say I will pay 70, or let's say I'll pay 80. I'm just giving an example as per my again present condition. So let's say till 40, till 50, I have no financial crunch, right? Till 50, I have no financial crunch. So till 50, I know in spite of 50, I can pay even 60, I can pay even 70, 80, whatever it is. That means what I meant to say, my exact EMI could be 50, but I can pay even more than that comfortably. Because after 50, probably because of other commitment, and as I know the pre-notified commitment, I'll not be able to that 50 also. That time probably I'll be hassle free, I'll be able to pay even 30,000, or let's say even 40,000, or let's say even 20,000. But as I told you, the fundamental of EMI is what? The 50,000, and let's say the total amount, whatever it is, it will be divided through your equivalent monthly installment throughout your 20 years tenure. But if I take this option called step down option, initial, let's say 10 years, I'm going to pay more. Now, as I told you, after 50, I'll be having a commitment, I'll be having a different scenario. I'm not even able to pay my regular 50. I can reduce that pay, let's say it could be 20, 30, whatever it is. So if I'm reducing later on my tenure, then I need to pay more the beginning of my tenure. And that is the exact fundamental part of this step down option. So initial 10 years, I'll pay more. From the 11th to 20th year, I'll pay less because of that commitment. And that is all about my step down option. So bank are also happy. You are not a defaulter. As usual, as I told you, this is the basic of the lender and the borrower even situation, the relationship, as I told you. So there will be no even commitment gap. There will be no even defaulter. There will be no even EMI like bounce. But as per my scenario, as per my commitment, I can fix it up. And how I am fixing? Initial 10 years, I'll pay more with no financial crunch. Later part of my tenure, that is 11 to 20th, I'll pay little bit less. And that option is called my step down option. That means I'm just downing my EMI later part of my tenure. Right, so I hope, see, again, this concept will help you all. This concept is all like, especially people are home buyers, people are, let's say, planning to take some loan. Definitely, before you go to the bank, you should have this. You can plan up this. Because today, you know, even once I take a home loan and home loan tenure, and that would be a huge commitment. Because on an average, if I look out even any place of India, especially I'm talking for India currently, so any place, if I look out, let's say a minimum cost will be how much? It will be even not even average even 50 to 1 crore. So if I look out on a entire tenure and entire part, if I look out, so definitely I need to pay even almost even 80-90% of the total amount. and that is not a small amount. So if I'm not even able to fulfill my own commitment, let's say by this time, so what I'm going to do, actually I'm just going to lose my own money, I'm going to lose my own savings, and that is going to affect my other things. But if I know this option, if I know how to utilize this step down payment or step down installment, so definitely both sides I'm able to manage, right? And that is all about your choice, that is all about your commitment. I'm just here to just share all my case studies. I'm just here to share all my experience, as I told you, like all my previous 16 17 years, whatever my experience. I'm just here to guide you, I'm just here to help you out. Yes, definitely it is all yours. How you feel, how you're going to take it forward, how you utilize this, that is definitely, it is up to your choice, right? So thanks for watching, thanks once again, and being here. uh, Definitely we'll meet up again. And just to tell you also, like I'm just expecting a lot of your questions, lot of your like in chat box, even in mailbox. So I'm expecting a lot of questions, lot of your even strategy, if you want to make something strategy. So have a great time.